Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an amazing weekend. In today's video, we are taking a look at the recent correction for the cryptocurrency market, discussing what this move means, where Bitcoin is likely to go to next, whether or not this correction is over, and of course the impact this is having and potentially could continue to have on the broader cryptocurrency market. We'll also be taking a look at the weekly chart, discussing some key warning signs moving into the weekly candle close, the next levels of support and key targets for the short-term price action, as well as potential reversal points. We'll also be doing a daily analysis discussing some key technical levels such as the 50 EMA, and of course the Gaussian channel, and of course discussing the broader cryptocurrency market. Before we go ahead and get into all of that, because there is so much to be taking a look at, go ahead and smash that like button, hit that subscribe button, and comment down below if you have any questions. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel. To find out more information, go ahead and contact the admin by clicking this link. Check out our 53 plus month trading track record, or watching a 10-minute video showing you inside the channel. Go ahead and check it out. We'll love to have you in there. Let's jump into the content. So as we have been warning for the past few weeks, the loss of the critical level of support at 115,000 was going to result in a flash correction down to that $113,000 to $114,000 support. We can see over the past 24 hours, we saw the correction into that region, and we have actually now seen that level reject as a point of resistance. We came back up, testing this area in, unable to sustain above, correcting back down to 112,000. Now the correction below this 115,000 marked two things. Number one, it marked the end of this horizontal consolidation, suggesting that there was just not enough demand at these levels to sustain prices, as we saw consecutive lower highs over the course of a few months within that July period. We also saw again an indication that the buyers were unable to sustain above that base of support, suggesting the sellers had jumped in control, pushing the price back to retest the prior buy-side liquidity of the top of our prior horizontal consolidation at 112, which was where we are currently retesting. The loss of this short-term support will very likely result in the measured move consolidation of a measured move target playing out from the prior horizontal consolidation, which takes us directly into 110,000. So we are very much in a downward trend. The sellers are very much in control here in the short term, and the direction is still going to be pointing down with an immediate short-term support sitting at 112, which we have just recently seen a short-term bounce from. In today's video, we'll be discussing whether or not that is enough, and of course going into much more detail about what is happening. Moving quickly over to the macro charts, we do have the weekly candle close coming up very soon, which is in a day, and of course the RSI have seen a negative pivot, and that will be confirmed in 24 hours, which can increase the potential of further corrections. With that also being said, we do have the risk of the total cryptocurrency market cap breaking down. The total altcoin market, however, has reached our high time frame support at 940 billion, and we also are seeing some daily warning signs such as the breakdown of the 50 EMA, and of course the break into the upper band of the Gaussian channel. So a lot to take a look at. We'll jump into all of that when we get to our analysis, but let's start on the market data. 24-hour volume is down 41% at 250 billion. Liquidations down 63%, still very high, 368 million. The majority, of course, coming from long positions. Moving over to the DXY. This is some good signs over here. The DXY have seen a rejection into that close over here, pushing back to 98. Of course, as we know, breaking above the change of character. We can see the change of character level right here, just above 100, sitting around 101.5. did act as a rejection as we discussed in May. Of course, breaking above the change of character, very bad for risk assets. While we remain below, there is still a good chance we do see reverses across the board. So it's a good sign, but of course we need to see how that reacts moving into the upcoming week. Of course, as we know, the rally in the DXY was largely as a consequence to the slightly more bearish tone during that Federal Reserve press conference. Moving over to the S&P 500, some terrible signs here for the S&P 500. First and foremost, we have seen a breakdown of the prior high over here at 6329. This, of course, indicating that the sellers are now in control of this trend. With that, we have seen the RSI drop below some pretty important lows over here. Looking at these lows back over here, dropping below these levels, suggesting that there is more weakness or more bearish momentum here. The bears are in control over here, more so here than they even were back on the short-term correction. So this is not a fantastic sign, and it will likely indicate there is some more downward price action coming this week, potentially into that $6,166 level, which is the prior break of structure, the 50 EMA, which would confirm the mean reversion before we have any chance of continuing back upwards. And if we do drop below that level, well, then the high time frame charts are at risk of an extended correction. So I don't necessarily think, I think it might be a little too early to say that this is a bearish correction. Of course, we are still above the prior high. We are above the 50 EMA. We do have some warning signs here in the RSI. We could see mean reversion as low as these levels. If we do drop below these levels, I think that is going to be a very, very bad sign. But for now, this could just be a healthy pullback before we continue back upwards. We need to see how that develops moving into the new week. But the key levels we are really watching is going to be the 50 and that break of structure level. That is it for the broader market updates, guys. Let's go ahead and jump into Bitcoin. Before we do, make sure to go ahead and sign up to BitGet, BitUnix, and BingX. The exchange links are down below. You'll get a lifetime trading fee discount of 15%. Which can build up to 45% based on your trading volume. You'll go to support me making this content for you, and of course you'll be trading on exchanges I use and I trust. Go ahead and check it out. We'll play an ad and we'll jump right back into it. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get back into it. Now, there is so much to be taking a look at in today's video. I almost don't even know where to start, but we are going to go ahead and jump into the macro charts first, and then break it down into the short term and the total cryptocurrency and altcoin market. So, as we know, guys, 23 hours now until the upcoming weekly close, and there's been a trend line we've been watching on the RSI for a little bit now, and this is the uptrend spanning back from the low at around 74 to 75,000, essentially at that retest of the 50 EMA, and of course the upper band of that Gaussian channel. Now, through the history of Bitcoin's price action over the course since essentially the beginning of 2023, we've had a very, very similar pattern unfolding in regards to the price action. Let's just chuck this on a log chart real quick so we can see it a little easier. And of course, the RSI. And that has been, we have seen periods of consolidations, whether it be horizontal or downward trending consolidations, with downtrending momentum, followed by positive momentum shifts and rallies. If we take a look all the way back at our first consolidation, this of course was our horizontal consolidation back in 2023. We had, of course, the horizontal consolidation with the downtrending RSI. We broke the downtrending RSI, signifying a positive momentum shift, and we saw a strong rally toward the upside. With that, we created a uptrend on the RSI. And of course, when we broke the uptrend on the RSI, the trend that was established during the expansion phase after the breakout of the bullish consolidation resulted in a new downtrend. That downtrend in this instance formed a descending channel formation, which we know to be a bullish consolidation pattern, but nevertheless it resulted in a multi-month downtrend in that instance as well, creating a new downtrend on the RSI. This of course representing decreasing momentum, but overall absorption in the price action due to the structural formation of which we were consolidating in. During that pattern, we eventually saw a breakout of the RSI, again signifying a positive momentum shift, which facilitated the next leg up for the market, that expansionary phase. Similar to the prior uptrend, we as well created an uptrend on the RSI. And when that uptrend on the RSI broke, we yet again entered a multi-month correction toward the downside, developing yet again another downtrend on the RSI, signifying the exhaustion was developing and the sellers were losing steam. With that correction into the baseline of the Ichimoku cloud, into the upper band of the Gaussian channel and 50 EMA, we then saw a reversal developing yet again, you guessed it, another uptrend on the RSI, which we have just broken down. The same pattern over and over and over has been playing out over the course of the last 2 and a bit years. This is consolidation into expansion as a consequence of positive momentum shifts, resulting in uptrends, which eventually break down as a consequence of negative weekly momentum shifts, only to then repeat that pattern not once, not twice, 3 times, going on 4 times now. So yes, this is of concern. We are seeing a weekly negative momentum shift, which if we look at in the history of price action since 2023, in this bull run, we're looking at this bull run particularly, which has been going on since 2023, every single time we have had these weekly negative momentum shifts, we have seen corrections for the market. So again, this is a warning sign. We do have the potential for this correction to develop. Nevertheless, when we are looking at confirmation of corrections, we use a 3-point method. We use structure, we use trend, we use strength. The more of these 3 that we have validated, the greater the probability the price will continue in the direction of the trend and not see any sort of failed breaks. In this instance, if we are looking at downward moves, in terms of strength, we will have a negative momentum shift upon the weekly. In terms of trend, okay, we have this uptrend which we are still holding above. In terms of structure, of course, there is some degree of a bearish divergence developing on the daily chart from here, but the overall structural formation is more unclear. We are not following any traditional structures, and therefore we are more or less watching the trend of the price action. So we need to see at least 2 out of 3 to be entirely confident that the price will continue in the downward direction, but the weekly breakdown in the RSI would be a leading sign the price action will continue down, and hence it is something we are watching very closely. So yes, this is something that is very, very bad that is developing. And historically, we have seen these negative momentum shifts have been leading for price action. It is very ironic that almost every single time in every single one of these consolidations, I have discussed every single one of these momentum shifts because again, I'm a momentum trader. Usually I do scalp trade, but when we're doing analysis in higher time frame, we do still apply the same concepts. And almost every single time we have been discussing this, without a doubt, the bias has always been in the opposite direction. With the positive momentum shifts, people were expecting lower. When we've had negative momentum shifts, people have been expecting higher, and that has been consistent this entire time. And I do believe at this time again, we will most likely be seeing a discrepancy in what the momentum is suggesting and what the general consensus is. People are probably expecting higher here, even though we are seeing these negative momentum shifts being that of a leading indicator for the price action. So is this something you should stress about too much? I think it is something we should be paying attention to. It definitely is a major warning sign. And I will add that if we look at the prior top for Bitcoin, which is a 2021 top, we had 2 things. We had the bearish momentum, okay? We had the bearish divergence, and we had on that second peak, we had a very similar structural formation, which is a 2-tap bearish momentum breakdown. What we can see here, again, we have the bearish divergence, followed by the 2 tap on the second peak, okay, with the negative momentum breakdown. Pretty similar, so that is something to consider. Now, when we are looking at the weekly chart again, we do have the potential top dates for the 4-year cycle that come into effect. And we have smack bang in the middle of the negative 2-bar theory top date, which could be predictive of a correction. Of course, the negative 2-bar theory is just a theory. It is not set in stone. It is a cycle. Any sort of cyclical theory is just a theory humans create to try explain the potential future of the price action or even the current price action based on similarities in price performance over particular periods of time frames. That is it. It is not a predictive measure. It is a diagnostic measure. So therefore, it shouldn't be used in predictive analysis. Simply, it should only be used to explain what is happening at a speculative means. 30 bars, 28 bars, extrapolate to 26 bars, August, the first week of August, a potential top or correction. That is what that is suggestive of. If that fails, well, then we have October 6th as a potential top and correction date. I'll say what I said in my prior video. Do not box yourself into the ideology that the 4-year cycle has to play out and we have to see tops here. It may not happen. The 4-year cycle is statistically more probably likely to break the longer it goes on for than not, particularly with significantly more and more people paying attention to it this time around. So will we see a top out? Will we see a correction then continuations? It is possible, okay? Will we just see a correction earlier at the negative 2-bar theory? It is possible. But I think the key thing you need to pay attention to is the word top may not mean what it has meant before. If we look at the tops, when people say tops, they like to assign the word top to here and to here and to here. But in reality, this was a top. Okay, this was a top. This may be a top. A top is any top to a higher time frame continuation that then sees a equally high time frame or at least a high time frame correction. Okay, these are local tops. These are still tops for the price action. So will it be a macro top on these particular dates? Maybe, but also maybe not. And guess what? It's irrelevant to even speculate because you should be trading based on what the price action is doing and how it is developing. Let's move over now to the daily chart. The daily chart is showing some weakness. We do have some key levels we're watching. Number one, we have the breakdown of the 50 EMA. If we look at the 50 EMA, we have lost it once in the uptrend since we broke above it back in April. Now, if we look at the 50 EMA, we have been essentially underneath it over here since Feb. We saw the correction all the way down. Then we finally broke back in April. We have been above the 50 EMA this entire time, seeing deviation below in June. Now, I do believe, I could be wrong, but I think that was pretty close to around the military conflict in Iran. I'll have to just double check and re-jog my memory, but I do think it was around there, which would justify the deviation. But now we are seeing an unrelated news event or a breakdown not related to any external news occurring, which is something we need to be paying attention to because we are seeing this breakdown on the 50 EMA happen essentially for the first time since April, which is when the trend started. Now, in conjunction with that, we are also seeing that breakdown on, of course, the RSI, and we look at where that low was, that was in April, okay? So we have that trend over here. We've had mean reversion in that breakdown on the short term to the 50 EMA. Now, if we factor in, we do also have the Gaussian channel. The Gaussian channel breakdown into the upper band of the Gaussian channel increases the likelihood of a move to the midline, and the midline over here is sitting at 110. Now, that takes us to the shorter term time frame. If we're looking at the 4-hour chart over here, the 110 level is going to be the next high time frame support. If, of course, we look at the measured move, which is the move, essentially the ratio move expected from the distance between the range high and range low, the prior consolidation, applied to the breakdown point, could take us to 110. So we have some confluence there at 110. But of course, as we mentioned in the intro, we actually do have a little bit of support here. And that is going to be, if we zoom in real close, we'll just draw these lines up perfectly. You can see the prior level of resistance. This is going to be the buyer side liquidity. We have seen a reversion on that as support. So this is a good sign. It does mean that there is still some demand coming through at these levels. It does mean these levels are being respected. But we have to contextualize, right? When we look at these trends, this isn't really enough to say, okay, the downtrend's over, bull's back in control, we're going to go up. It's not enough. It's a good sign, provided we hold, but it's not really enough to reverse this trend. So the trend is still expecting to continue down. We are still looking for 110 for Bitcoin. We are still looking for that level to hold a support. And that is going to remain to be the fact, provided we remain in this general downtrend. And what is this general downtrend? Well, we are looking at the closes over here on the 4-hour. We're looking at these highs. We've got this high over here, this lower high, this lower high. At the best, we need to start to see 114,000 break above. If we can break above 114,000, well, yes, that would be a sign that the trend, which has been down over here, is reversing. And that would be a good sign that the buyers are getting back in control. But until that happens, this is still looking like a downtrend. This is still showing weakness. This is still showing exhaustion. And the confluence points is still sitting below the trend, below the current market price. So let's zoom out a little bit more over here to, again, the 4-hour. But let's zoom the price action out a bit. We do have this 110 as support. We're just showing you confluence of 110 with the expectation of the midline on the Gaussian channel. We're showing you the breakdown of the 50 EMA that has confluence with the breakdown of the negative momentum shift, the RSI and the weekly. And now we can show you, if we take a look at that 110 level, that is sitting up in this region, which is over here. But when we're looking at our sell side liquidity levels, we are watching 100,000 to 98,000, meaning that although we could find support at 110, that might not be the lowest Bitcoin will move. We could definitely see corrections into this sell side liquidity at 100 to 98,000 if this trend aggressively continues downwards. That is a little bit too soon to say for sure. Again, we need to see the break of 110. We need to see the weekly trend break to be confident in that move, but it's becoming a real possibility, okay? That is the key thing. It's becoming a possibility. Now, again, if we break above 114, the buyers get back in control. But until then, they are not. Something to consider. Now, hopefully they do, but of course, what we want to see doesn't really have any bearing on what the price does. Moving over, total cryptocurrency market cap. Total cryptocurrency market cap not looking fantastic. Bearish engulfing candle. Weekly breakdown of 3.73 trillion. We are looking for a lower move, guys. Still, we are still looking for a lower move into the break of structure. We've told you this already. Nothing we are telling you here is something we haven't been prepared for weeks. We have been discussing these potentials. And this is why I always say, in horizontal moves, in periods of uncertainty, the best thing you can do is to open your eyes to all possible scenarios and plan for every scenario. It is the people that choose one particular direction and are hell-bent. They will die on their heel for that direction, ignoring every other potential opportunity, ignoring every other possibility, are the ones that are suffering on these pullbacks. It is not the people who have been paying attention, who have been preparing, who have been understanding the impact of these particular moves, and although haven't had a necessarily strong bias in either direction, have had plans in motion and set to go when the key trigger points break so they can capitalize on no matter what happens. And that's what trading is about. It's not about being right. It is not about being right. It is about making profit. People get them mixed up that trading is about being correct all the time and about predicting the future and having a crystal ball. That's not what trading is about. Anyone who leaves you to believe that is what trading is does not know what trading is about. Trading is about setting calculated plans based on historical and developing data to assess the entire context of the market from structural perspectives and technical perspectives to develop a variety of different game plans in which you have trigger points to execute and, of course, manage your risk along the way. That is what trading is about. So when we're looking at these levels, nothing I'm telling you is 100% certain going to happen. We're not saying that, but we're saying based on the context of the price action, from a structural and technical perspective, from an economic perspective, for whatever is developing, this is what we deem to be the most probable outcomes. Now we have got actionable data presented, and of course we've got invalidations and alternate scenarios if the price does develop the other way. But currently, it is looking bearish. The short term is not looking fantastic. Moving over to the altcoin market. Altcoin market, 940 billion. Now, this is the silver lining. This is a key support for the altcoin market. But I will warn you, if Bitcoin continues down, even to 110, Bitcoin dominance is going to pop upwards, potentially even back to 64. If we see that happen for Bitcoin dominance, the altcoin market will correct aggressively back to the 200, and we will see a large move down for alts. Okay, they will not hold well if Bitcoin pushes to 110. Of course, the total altcoin market cap will also, total cryptocurrency market cap will also see a correction. So again, a lot of people are probably panicking. Oh, what happens now? What do we do now? What do we do now? The reality is we've been preparing to plan for this already. If you haven't been paying attention, some people may be stressed, and I think this stress is a natural consequence or is a learning opportunity for people to be more attentive to the market. And I'm not telling you to listen to me. I don't want anyone to listen to me. I want people to listen to me only if they choose to and they resonate with what I'm saying. But of course, these emotional responses are a sign that your risk management has not been up to par with what it should be. Whether it be fear, whether it be euphoria, whether it be greed, all these emotional responses are warning signs. Your body is giving you warning signs to tell you that you are doing something wrong. You are taking on too much risk. You are not following your risk management strategies. You are leaving things up to fate. That is what those things are. They're adrenaline. Fear and euphoria are almost exactly the same thing, except one is worrying about a negative outcome and one is worrying about a positive outcome. They're the same thing. If you're feeling that in the market, it is very, very likely you are most probably overexposed. So thank you for tuning in, guys. Have a fantastic day. Sorry about those philosophical points. Again, we're just here to talk about the TA and the charts. The reality is there's some key warning signs that are really developing now. We've seen the breakdown as we've been discussing. The price is still moving downwards. The bears are still in control. The risk of steeper corrections are very, very possible if we can't get above 114. Get above 114, then we can start talking about reversals. Then we can start looking for opportunities toward the upside. Until then, it is looking a little sketch. That is just my take. That is what I think. If you have different opinions, of course, you're always entitled to have those. This is just my personal analysis. Thanks for tuning in. Catch you guys in tomorrow's video. Bye.